Question 48 is by far the biggest of this group of questions and asks us to calculate the carrying amount to be shown in the SFP for property, plant and equipment. So that's every one of the non-current assets which are held. So in the exam what you would need to do is use your scratch pad here to work through all of the different assets that we've got. So if we started off with looking at our trial balance, we can see that we've got this surplus piece of land which actually has been sold. We've then got our normal property, and they've given us all the figures to split that between land and buildings. And remember, the reason for that is that land is generally not depreciated at all. And then we've also got our plant and equipment. Ultimately what we need to do is put all of those together to give us a total figure. So the easiest way to do this is actually to lay it out largely like we would a non-current asset note to our financial statements. So if we start off with the cost figures brought forward as per the trial balance, we could go and pick all of these up. We have a note that splits our land and buildings between the two elements. And then in terms of what happens to our assets, in this case, having read through the scenario, we don't have any additions, but what we do have is some disposals to take account of, and we also have a revaluation, which we've already seen. So in terms of the disposal, this surplus piece of land has been disposed, so we definitely need to get rid of that. And then there's an item of plant and equipment which has been scrapped. All of this is just appearing in note 2. So the cost of that item that's been scrapped was 620,000, and we need to come and take that out of here. In terms of our revaluations, that would be the next thing for us to think about. And we already saw that we had a revaluation to credit of 500, but now we're going to break that down a little bit further. So in terms of the figures they've given us, we want to carry forward 4,100 in relation to our land and 5,700 as a cost figure for our buildings. So the revaluation here would be an increase of 600 and here a reduction of 2,000. So that what we end up with is our adjusted cost figures for each of our categories. We then need to carry on below that to go and think about our accumulated depreciation across each of our categories. And again, if we start off by going back to our trial balance, we can pick up that our buildings had accumulated depreciation of 1,900 and the plant and equipment 2,840. Remember that on a revaluation, one of the first things we do is actually remove any accumulated depreciation. So when we revalued those buildings, we would need to get rid of that 1,900. Similarly, the piece of plant which has been disposed of, the accumulated depreciation on that will need to be removed, and in our note it tells us that that's an amount of 600. So that we can make our adjustments for those two key entries, which would then allow us to go and calculate what the depreciation charge for the year is. So in relation to the buildings, it tells us that we depreciate our buildings on a 5% straight line basis. So having revalued those buildings to 5.7 million, we would calculate a revised depreciation charge based on that 5.7, and here that would give us 285 as our depreciation charge for the year. Whereas with our plant and equipment, our method is 25% on the reducing balance basis. And so what we would do here is take the carrying value last year of 1,340 and strip out from that the net effect of our disposal. So the plant item that was disposed had a cost of 620, accumulated depreciation of 600. That would have a carrying value of 20 for us to deduct. And on that adjusted carrying value from last year, we would calculate our depreciation charge at 25% to give us a figure here of 330. So that again, we could go and add these down to calculate the accumulated depreciation that we would be carrying forward. And having done all of those workings, we could now work through what our final answer is. So as a final answer, we wanted to calculate the carrying value, the net book value, for us to take forward. So the surplus piece of land has been disposed, there's nothing to take forward there. The remaining land will be taken forward at its revalued amount of 4.1 million. Buildings would be taken forward at their revalued amount of 5.7 million, but less that depreciation charge of 285. And then our plant and equipment, we totaled down our cost to a figure of 3.56 million and our accumulated depreciation to 2.57 million, so that would give us a carrying value of 990. Across all of those assets, our total carrying value then would be 10,505, and in this case that would be our answer to take through.